Before we dive into the November numbers, here's something every Yakima buyer and seller needs to hear. More home deals are falling apart right now than we have seen in years. Nationally, about 15% of homes that go under contract fail to close. That's nearly 1 in 6 deals canceling after going under contract before the finish line. And I am seeing that trend here in Yakima too on both the buying and the selling sides. So today's recap isn't just about where pricing or inventory went, although we will get to that. It's about what's really happening in this market and how to protect yourself from being part of that 15%. So first, we always talk about the national news, and nationally, the market continues to shift towards balance. Inventory is up in most regions, buyers are more sensitive to affordability, and homes are taking longer to go pending. And add in the higher mortgage rates, stricter lending, and more negotiation pressure, and it's no surprise we're seeing elevated cancellation rates. Now, I want to give you a little bit of context. 15% of contracts canceled in September of 2025. That is up 13.6% from last year. The summer peak actually hit 15.3%, one of the highest cancellation levels on record. Historically, cancellation and fallout rates are closer to 6 to 12%, depending on the market cycle that we're in. Right now, buyers have more choices, more leverage, and more willingness to walk away if something does not feel right. That mindset is showing up here in Yakima too. Now let's talk about some of the local stats. The average sales price is $379,768, which is down 3.86% year over year, and the median sales price is $370, which is actually up 2.78% year over year. So what this tells us is the core of the market really does remain strong, but the higher price points are really pulling that average down because they are not selling as quickly. Because this is the sales price, not average list price. Right now, the average active list price is $464,711, which is up 4.84% year over year. And the median active list price is $412,500, which is up 3.38% year over year. So sellers remain confident. They're still pricing aspirationally. That could be a good or a bad thing. And the absorption rate is at 3.73 months, which is up 6.2% year over year, but it's actually down a little bit over last month. It's because we have less listings coming on the market going into the winter and the holiday season. So we're trending still slowly toward a balanced market, but still favoring sellers. Again, something that I talk about in every market recap video is that we have micro markets and bands in our market based on price point. So this is true for the total market. It may not be true for your location or your price point. Now let's get to days on market. Average days on market is 84 days, which is up 13.51% year over year. And the median days on market is 66 days, which is up 22% year over year. It's just important to know that pricing your home appropriately and presenting appropriately are always the most important things you can do when you're getting ready to sell your home. And know that it may take a little longer to go under contract, especially if you're not doing these things aggressively. Homes are taking an average of 2 to 3 weeks longer to sell than this time last year. Now let's talk a little bit about the activity levels that we're seeing. There were 145 sales in November, which is down 7.1% year over year, but pending sales are up 16.5% year over year. This is really a big indicator that buyer activity is returning. This pending jump matters a lot because it shows that demand is still strong, even in a shifting market. So let's talk about some of those price bracket highlights. The strongest segment is from $300,000 to $399,000, which is up 39% in sales year over year. And the softest segment we're seeing right now is actually the $500,000 plus price point, which is down 23%. That's everywhere up. We can get more granular with that depending on your potential pricing market, but $500,000 up, down 23%. So move-up buyers are still driving this market. So let's talk a little bit more about the contract fallout issue. It's a trend I mentioned earlier, and it's deals falling out of contract. Now, nationally, 1 in 6 pending sales is canceling. And while Yakima doesn't publish cancellation stats publicly, I can say from my own transactions and from conversations with other agents and lenders, we are absolutely feeling this too. So let's talk a little bit about why deals are falling apart right now. Some of the reasons that I am seeing and my friends, fellow agents, lenders are seeing is one reason, cold feet or buyer's remorse. They're getting into contract and they're deciding, you know what? I just don't think this is the right one. I don't feel right about this. I don't feel good about this. Whatever the reasons that are going on in their tummy, not always the most verbalizable reason, but essentially it comes down to cold feet or buyer's remorse. Another reason is financing issues or appraisal gaps. With interest rates being higher, often that loan to value ratio is a lot harder to achieve. Payments are higher than expected. Even insurance and insurance quotes can be higher than expected. And we're seeing a lot more appraisal gaps now too, because sellers sometimes are pricing in alignment with past market expectations. They may be able to nab a buyer at that price, but the appraiser is saying that the current market doesn't justify this. So sometimes we're seeing that as well. We're also seeing inspection surprises. So it's not necessarily that the homes are in worse conditions than they were in the past. It's just people are not as willing to take anything, and they are not as willing to work with sellers on prioritization of what repairs are really must-dos and which ones are more okay to let go. So inspections are much harder negotiation right now. And because there is more inventory, there are more options, which means buyers feel less locked in. So if they have concerns about any one of these things, they feel a lot more comfortable getting out of the contract and then moving on to another home. So why this matters for sellers is pending does not mean sold. You may lose 2 to 4 weeks of market time if your deal collapses. So making sure that we're doing things right up front from a seller's agent point of view to make sure that we have solid buyers is important. Pricing and preparation matter now more than ever to attract solid buyers and maybe even garner multiple offers if we can, so that way we can negotiate other aspects of the contract and they can feel lucky to be getting into your home. Remember, a strong agent can help vet buyers, negotiate contracts, solidify them, and negotiate repairs. But still, we can only control so much. Now, why this matters for buyers is you need a solid pre-approval, not a pre-qualification. You've always needed that. It's always been an important part of the writing an offer process. But agents right now, we know that contracts are getting canceled more and more often. So we want to see a pre-approval, not a pre-qual. We want to know that things have been done on your file. And you need to know your deal breakers before the inspection. Are you concerned about the foundation? Are you concerned about potential water damage? Are you concerned about the roof? Think about those potential deal breakers beforehand and have a good agent that's going to guide you, of course. And don't write an offer until you are truly ready and you truly feel it and it feels like it's the one. A good agent can help you prevent surprises, manage timelines, and navigate emotions. But again, some of these factors are outside of anyone's control, except for yours as the buyer or seller. So this is exactly why strategic education and clear expectations make such a difference right now. So what should sellers do? Prep your home thoroughly to reduce inspection-related fallout. Maybe even consider a pre-inspection with that. I can help navigate that. There's a lot of liability that potentially comes with pre-inspection, but you can navigate it. It's a more in-depth conversation than I can do here. Also, you should price appropriately for your micro market. Listen to your agent. Be ready to list lower than you may have expected because you cannot be as aggressive as you could have been in these past markets. And be ready for negotiation because this is normal right now. That is what the buyers are expecting. You need to be prepared for that. When I am prepping net sheets right now, I'm figuring in buyer closing costs because I know that they're going to bring that to the table in negotiation. So I am talking to clients about that and we're preparing for that up front. You also want to be working with an agent who can minimize risk, track the buyer's commitments throughout the contract process, and keep the deal moving forward. Now, what should buyers do about this? The first thing they should do is they should get fully underwritten, if possible, in their lender file. They should also understand appraisal expectations up front. They should also budget for repairs and don't let small concerns tank the deal. Really you can think about it monetarily if you need to, and your agent can help you do that. Also, ask questions early so you feel really confident staying the course. A good agent wants you to ask questions, wants you to feel confident in your decisions, and wants you to feel empowered throughout the process. So asking questions is a really important part of that. Now, as we wrap up 2025, Yakima's market remains resilient, steady, and active, but also more nuanced than ever. So whether you're buying or selling in 2026, I'm here to help you navigate every step with clarity and with strategy. I'm Corie Burck, your Yakima Valley Realtor, and I will see you in next month's market update. See you in the next one.